Yeah, it's Jersey Trades here, man. I hope everybody's doing well. Okay. Um, I just want to go straight to the point. See, this is a naked chart. Okay, this is a naked chart. Right now I'm on the good XAU the normal good. This is XAU or XAU I'm on the normal good. This one. Okay, I'm on that chart. And I want to show you people something right now. So this normal good. Okay, and this is a naked chart. Okay, when I go to the daily time frame. The model, okay, that I'm talking about is called the inversion fair value gap model. Okay, it's a model where let me make this one big. I don't want this video to be long. It's a model where we look for liquidity levels. Okay, so look for liquidity levels to be swept. Okay, then after the sweep of those liquidity levels, then we look for what inversion fair value gaps. Okay, very simple. You understand? Like the inversion fair value gap model. Okay. So we look for liquidity levels to be swept, and there are so many liquidity levels. Okay. Then we go to what the 1 minute time frame, or the 15 seconds, or the 30 seconds. You can even go to the 2 minutes, but the lowest, sorry, the highest you can go is the 3 minutes. Okay. And I think the lowest you can go is the 15 seconds. Okay. So I like the 1 minute a lot because those inversion fair value gaps are very, very quite um, clean. Okay. So first of all, we have something we call the daily EQ. Okay. It was recently that I started using the daily EQ. Okay. And it has helped me so much. And it's like a game changer to my forex trading. Okay. The daily EQ. And how do you draw the daily EQ? You take this tool here. It's called the what? The fib retracement. Okay. When you take that tool, then you draw 50% of your what? Your current day. Okay. So this is Sunday and this is what? Monday, which is today, 30th March. Okay, which is the current day. And if you want my Fibonacci settings, this is my Fibonacci settings. Okay. I basically have everything off. Then I have this one on the 10 one. This is on the line. I don't extend. You take zero. Then here I think it will be 0.65 something. You clear it and write 1 year. Untick everything here. Untick everything here except for the 0.5. You can choose your own colors. Okay, then I think you can copy everything that you see here. Okay, you can choose the font size that you want. Okay, and I think after doing that, you need to what? Save it. Okay, and mine is saved as premium and discount. Okay, so with your Fibonacci settings for done, and you've marked the 50% level of your daily what candle, you go to what the 4 hour and you mark out for what liquidity levels. Okay, so you mark out your liquidity levels on the 4 hour, you mark out liquidity levels on the 1 hour, and you mark out liquidity levels on the what? Sorry, the 4 hour and the 1 hour. Okay. So this one is like a 4 hour buy side liquidity because it's a swing high. Okay. What makes it a swing high? Look at the candle on the left, the candle on the right. This candle's high here, this candle's high here. Of all the three candles here, okay, the middle one is the one with the longest candle. So this is a swing high and it stands alone. Okay. Same for this candle here, the candle here, the candle here. If you look at this high and this high and this high, this one has the highest high also. So this is a swing high also. So anytime you see swing highs, they have a ton of liquidities resting above them. Okay. So we call this a 4 hour buy side liquidity. So we call swing highs buy side liquidities and it's on the 4 hour. So you can see I've written it here 4 hour BS buy side liquidity and I'm on the 4 hour. Okay. So I want to show you a trade. I want to use a trade that I got today. Okay, today I was very, very busy and I had to go to town to go and do something. So I took only just a trade and it was pre New York Open. Okay, you know, New York Open is at 9:30. And we all know that I trade from 9:30, but I took a pre New York Open setup. Not because I'm breaking my rules, but the setup was so good and I had to was risk it. Okay. So you go to the 4 hour, you mark out liquidity levels, and I think I took the trade around this candle here. Okay, so that's the reason I've marked out only this liquidity. You can mount out more liquidity here. This is swing high, this is another swing high, okay. But at the time that this candle was printing, these swing highs were not my focus. Okay. I want to make everything look real for you so that you see that what everything was real. Okay. So this is what a 4 hour buy side liquidity. I went to the 1 hour and this was a what this was at 2 o'clock. Okay. And you can see that what 2 o'clock failed to take out the what 11 o'clock high here. Do you understand? And I think that you mark out 1 hour buy side liquidities also. So I saw this 1 hour buy side liquidity here. But it was a 1 hour internal buy side liquidity. Okay. Why is there an internal buy side liquidity? Because you can see that what the price is moving from where swing low, swing high, swing low, swing high, swing low. You get me? So it's going like this, then it dropped. So since it dropped, this was the highest high of this leg. So any swing high that I would see here is called a what? An internal buy side liquidity. Okay, it's as simple as that. And I think at the time that price was printing, this ones hadn't formed. Okay, so the high was here. Okay, so I'm going to use this range. Okay, this candles were in the future from I think from 4 o'clock here. Okay, from this 4 o'clock going, all these candles hadn't formed. Okay, so price was like this. So this was the current high of what the day. So you move your what your Fibonacci to that current high there. Do you understand? Yeah. And I think if you check here, you see that what 2 o'clock cleared the high here. Okay, which was what 11 o'clock and 2 o'clock on what XAUEUR, which is here XAUEUR. And you can check on gold what did price do here. It failed to okay, and since it failed to what SMT. You understand? You can also check on GBP. GBP also did what? GBP also what took out the liquidity. Okay, and we are trading mainly on gold, but we are using XAU, EUR, and XAU GBP as reference point. Okay, so if you go to the 15 minutes, let me remove the SMT since you know there is SMT there. Okay, let me keep the SMT and remove this one. Sorry, let me see. Let me remove this buy side liquidity. Okay, because we all know that what this is a 1 hour buy side. I don't the chart is becoming too clustered and I don't like that. So this 1 hour buy side liquidity that was here, which is here. Okay, that's where the SMT formed, and I'm trying to remove it. And you know, EUR swept the liquidity, GBP swept the liquidity, but I see gold failed to reach out to that what liquidity by how many pips? By like it failed to reach there by about 47 pips. Okay, so so with this one here, I went to the 15 minutes personally because I'm going to look for what 15 minutes what Asia high, Asia low, okay, or landing high, landing low. But you can see that what at the time that I caught this trade here, no, price has already swept what Asia high. Okay, I would want price to sweep Asia high and reverse. But when price swept the Asia high here, it kept on going up. Do you understand? So that's why I never would participated in any trade here. Okay, but at the time that I showed up for the chart, price was exactly at what 245 here. Okay, that's when I started analyzing. Do you understand? So it means that what I came to see when price had already swept the Asia what high. Okay, and this is the 1 hour internal CSR liquidity. That's what I marked. Okay, you can see that there are so many liquidities that are being cleared. We cleared the Asia high, we cleared the 1 hour what buy side liquidity. EUR and GBP cleared was the 4 hour what buy side liquidity here. We created SMT here. That shows that what price wants to sell. Okay, so let me go back and this indicator here is called the what um it's called the ICT Q zones and pivot into bracket TFO. Okay, if you want to add an indicator, you go here indicators. Okay, and you enter here, then you search for what ICT Q zones and pivot, which is the first one here. You start it, then you press on it. Okay, then it will come like this. If you want that one, if you want the settings, you can copy all my settings here. Then it will yours will also come like mine. Okay, so you can copy all the settings that you see here so that yours will also come like mine very nicely. Okay, that's it. So as I was saying, let me let the indicator go, or else the chart will become so much. Okay, so now you see it becomes so simple to read. Okay, so we have our 1 hour and 10 hours buy side liquidity there, which is what a higher time frame key level. We swept it. You understand? We didn't reverse there. We were continuing going up. Then we came to sweep a swing higher, which is what the 4 hour buy side liquidity. And you cannot testify that what it got swept on what EUR. Okay, so sorry, it got swept on what EUR, which is this, and also got swept on what, because if you mark it horizontally, you can see that what it actually got swept, okay, by what the 230 candle. I can see it down there, okay, and EUR also swept it at the time of 245, okay, but what did we do? We failed to sweep that liquidity, okay, and we are going to what capitalize on what that liquidity sweep to do what, to sell, okay. So I went to the 1 minute to search for what an inversion fair value gap. As I said when I started this video, I said that what we are going to look for what liquidity sweeps, and the liquidity sweeps are what I'll be marking: 4 hour, 1 hour, London high. So I'm going to mention the liquidity sweeps. We have Asia high, Asia low. Okay, Asia high, Asia low is from the highest high from 8 p.m., which is the previous day 8 p.m., to the current day 12 what a.m., which is the 00 colon 00, which is here. You see something like this: 00 colon 00. Okay, if you look at down there, you see what 00 colon 00, which is what 12 a.m. So from what 20, which is back there, from the highest high from 20, which is 8 p.m., to um, midnight, which is what 12 a.m. of the current day, which is the highest high and the lowest low. So the lowest low is called Asia low, and the highest high is called what Asia high. London is from 2 a.m. to 5 a.m. So the highest high from 2 a.m. to 5 a.m. is called the London high, and the lowest low from 2 a.m. to 5 a.m. is called the London low. Then we also have previous day high and previous day low, which is the what the highest point of previous day and the lowest point of what previous day. Okay, and you can mark them going to the daily chart. Then you just come here, and they know the previous day of this current day is going to be what here, and which one here. Let me change the colors here for you so that you see it. So it's going to be this yellow line and what this yellow line. So the previous day low is going to be the yellow lines here, and this previous day high is also going to be the yellow line up there. Okay, because of this is the current day, sorry, this is the current day and this is the previous day. So if you were trading on what this day, I'm sorry, I know it's a Sunday candle, but I'm using this for a reference. If you were trading on this day, our previous day will be Friday. If you are trading on Friday, our previous day will be what Thursday. Okay, so if you are trading on Monday, our previous day is going to be what the previous candle. Okay, you can use though you can mark those ones out also. And also we move on to New York AM high and New York AM low. So New York AM high or New York Q zone high is the time of 9:30 to 11. The highest high from 9:30 to 11 and the lowest low from 9:30 to 11. Okay, so that one is also settled. Okay, so you can also see that at the time here, this is where my daily equilibrium is, which is a 50%. Okay, as I said, you need to mark your daily equilibrium from the lowest low of the current day or the day you are trading to the highest point where currently price would be. Okay, yes, so that will give you the daily equilibrium. Okay, and I want to have an indicator that draws it for you. Do you understand? It's called what? No duplicate interval range and EQ. You see, when I press it, you see my daily EQ will be drawn automatically, and my daily EQ is what? Purple. Okay, I don't know if this is violet purple. I call it purple. Okay, it draws automatically for me, and I want to go here, indicators, then you search no duplicate. Wait, what am I typing? No duplicate interval range and EQ, which is this one here. You start it, you press on it, it appears on the chart. So that one also, go here, then you copy my okay, first style, you copy this, copy visibility, come to input, then you copy everything here. Okay, that one you turn everything off. You can see I have everything off. Okay, copy what is here. I think it to be the default. Turn everything off here. Okay, just continue turning everything off. Turn everything off. Turn everything off. The only thing you have to turn on is go to daily levels. turn everything off except for the what, the EQ, because if I turn this thing off, you see that what, it will disappear from my chart. And I turn it on, you see it will come back, and I have it as what, color here. Okay, my alignment is what, 1. Then continue turning everything off from that side. From here, turn everything off here. Okay, turn everything off. Then after that, you want to save it as default and press OK. You get it like mine. Okay, so at the time my daily EQ was here, and I was aiming for the daily EQ. Unfortunately, we didn't get that, then move to that side, but we got a nice move. Okay, so this was the SMT. Okay, so when this SMT happened, I moved to the 1 minute and I saw price moving up like this. Okay, so I had to search for an inversion fair value gap. Okay, first of all, I saw an inversion fair value gap here. Okay, or I saw a fair value gap. Okay, which is so small. Okay, why am I saying it's so small? I take inversion fair value gaps that have pips of in the range of 50. Okay, so if I measure this inversion fair value gap, you can see that what I have only 3 pips, which is 0.3 dollar move. Okay, so we call the one with the point 3 the dollar move, and we call the one after the comma the what, the pips. So this is 3 pips. If you multiply your dollar move by 10, you get the what, the pips. So anytime multiply your dollar move by 10, you get the pips. Okay, this was 3, and I want something like 50, not 30. Okay, so this was very small, so I didn't consider this, and price kept on selling. Okay, because I know that I didn't panic, and I was like, oh, my setup is going to come, because there was an inversion fair value gap here, and there was another one with here. There was another fair value gap here, which was so small. Okay, and I didn't consider that one also. Okay, yeah, there was one here which was small, and I think there was another one here which was also what, a fair value gap. Okay, and if you measure that one is 9 pips. Do you understand? I didn't consider that one also. Okay, so one thing that I did, that I always do, is that anytime you see fair value gaps that are what, like they are stacked together. Okay, like the fair value gap here and the fair value gap here. You see, the moment you are from this fair value gap, no candle comes again. Then what, another fair value gap. If you see fair value gaps like this, you can add them together. Do you understand? So when I did this, then I did this, then I had what, 35 40 pips. Do you understand? I raised this move. I'm supposed to look for what, inversion fair value gap that are what, like 50 or 40 something getting to 50 or above 50. Okay, but I had this 35 and I had to risk it. So I I joined these two fair value gaps together, and I waited for price to what, close below my inversion fair value gap. Okay, so after closing, I entered on the next candle, and I placed my stop loss right above the what, this candle here. Okay, which was around 64 pips. That's 6.4 pip, sorry, $6.4 move. Okay, I aimed for 1:1, which is around here. I hit 1:1 straight after hitting my what, I use market execution. In this what setup, I like using market execution, because the moment you use limit orders, you might not get what you feel. Okay, so this is what, 1:1. You can see the one here. So I'm risking 1% to make one, and I had my destiny on 1:2. Okay, so my final TP was at 1:2, and you can see that what, we missed it by some what, some few cents or some few pips. Okay, so you can see that what, anytime I get my 1:1. Okay, you can learn from me or choose what you want. Okay, but this is what I do, and it works for me. Anytime I do my what, uh, I do my 1:1, I move my what, my stop loss to break even. Okay, I call that line what, the break even line. I move my stop loss to break even. After moving it to break even, I aim for what, more. Do you understand? Yes. So we have something we call partials. Okay, so anytime I hit 1:1, eh, anytime I hit 1:1, I take some part of my position off. Okay, so let's say I'm using a lot size of, if I'm using a lot size of maybe 0.9. Okay, if I'm using a lot size of 0.9 or 0.8, anytime I hit 1:1, I take 50% off. That would be like 50% of 0.9. The rest, or so the amount of money that I've made from the entry to the 0.1 will be taken off. Okay, and the rest of the what, the trade running. Okay, so if you do sorry, I'm coming. let's see. Let me see if I can bring my calculator up. Uh, so if I bring my calculator up here, okay, and if you do 50%, okay, times 0. Let's see, 0.9, okay. So sorry, why is this not giving? Okay, that's 0.9. Why is not giving me 0.9? 0.8. Uh, okay, then let me do it like this. That's like that's yeah. So let me do it 9. This is going to be somewhere 50%. Let me see 0. Sorry. Let me try 9 divided by 10. Okay. Why is this giving me that? I'm not pressing. Am I on program? Okay, calculator. So 0.9 times 50%. That's what? 0.45. Do you understand? Yes. So which means that what? When I take 50% off of 0.9, I'm taking out 0.45 out, and it will be left with 0.45. So 0.45 is to pay myself for waiting for what 1:1. So the moment 50% goes, I wait for what 50% to run. So sometimes I aim for what more pips. Do you understand? So you can see that what 1:1 give me 64 pips. Okay, just 1:1 is 64 pips. If I'm aiming for 1:2, so this was actually my final TP, which was what 128 pips, almost 130 pips. That's so much pips. Okay, not everybody can make this amount of what pips. This 128, which is almost 130 pips. Do you get me? Yes. So price missed my final TP by I think uh, like 3 pips. Okay, like $0.3 move. Okay, it missed it by just 3 pips, and that's fine. Okay, so my stop loss was at break even 0.5 off, 0.5 left. I saw this retracement here, and I never. Sorry, I didn't. I wasn't. I was okay with price hitting my stop loss at my break even because until my stop loss is above my entry line, that's when I go at a loss. But if my stop loss is here, it means that what if price, even if price hits my stop loss at what break even before hitting my entry line, I still don't lose money. Do you understand? Yes, I'm still going to be green on the what they did. Okay, so I waited, and price kept on what moving lower with my the rest of my 0.5. Okay, so it moved lower for another 199 pips. That's like almost 200 pips. Okay, and I think at this time here, which is 3:34, I was supposed to go towards town. So I had to what, close my trade around somewhere here. Okay, I didn't even wait for this long candle to come. I closed my trade around somewhere 162 pips. Okay, and 162 pips on gold is so crazy. Okay, so later then price reversed around this area here and then hits my break even line. Okay, so this is the model that I'm trading, and I'm going to trade this, and this has a win rate of like 86 to 95. Okay, 95%, and it's so crazy. Okay, it's so crazy. Like I know you need to try this thing out for yourself. Okay, before you can really understand what I'm doing. Okay, I only trade this on gold. Okay, I don't know. You can apply it to forex. You can apply it to. I trade this on gold, Nasdaq and ES. Okay, but right now I'm testing it on gold and I'm really hating TPs. Okay, so I tested it on Nasdaq and ES and I was hitting TPs, but for Nasdaq and ES, I wanted to relax small because gold really moves a lot, and everybody likes money. Okay, so I wanted to focus on gold and later on focus on Nasdaq and ES. Okay, this was my trade for today, and I think after that price kept on moving, and I think Powell started speaking at around 10. If I'm not wrong, I think Powell started speaking around 10:30. Okay, he started speaking around 10:30 a.m., which is here. Okay, and so a lot of traders today, I think plenty of them hit stop losses today. Okay, just because of the man speaking. Yeah, I think price didn't really move back. Still, people use stop losses. And so I think currently this where price is okay. And I came back to come and look at what price is doing, and I still didn't get anything. Actually, at 9:30, I was looking for the sweep of what the liquidity here. Okay, and that liquidity there would have been a very nice what a very nice sweep at what the equity. Okay, I trade from 9:30. Okay, so if I move to the 15 minutes, you see that what this is the 9:30 candle. I was waiting for it to sweep this high. Okay, but it failed to. You can see that that was some gold, and if you check EUR, you can see that what they also what let me remove this. It also failed to sweep the highs here. You understand? And if you check gold, you can see that what you might think gold swept it. Gold never swept it. You can see there's a small distance in between it, and I can measure the pips for you. If you measure the pips, that's like 0.89 pips. Just that small thing there. It's just this small thing from here to here is what from here to here. You see that small thing here is what 89 pips, almost 90 pips. Do you understand? And you can see that what price really moved like what almost 1,000 pips for just this candle here. 1,000 pips. And this guy Paul started speaking at 10:30. Okay. So if I show you the 10:30 candle, that one also, let me see how much pips that one also moved. That candle moves 1,022 pips. Just that 15-minute one candle moved 1,022 pips. Okay. So you shouldn't joke with what Paul will say. A lot of people hit stop losses here, even though they were right. People were buying here. Okay. And even me, there was a swing high that a swing low that I saw. Okay, let me remove this. Okay, I saw this swing low, but I still didn't want to participate in it. You see, there's a swing low here. You can see the swing low here, the swing low here. This swing low is the lowest amongst all the three. Okay, I saw this one here, but the reason why I didn't want to participate in this thing is because I do not, listen, I do not, I'm saying it again. If you see this daily equity line here, I do not buy in this area. Anytime I'm above or anytime price is above the daily EQ, all what I'm looking for is what something like this. Sell. I want to sell back to the daily EQ. Do you understand? And anytime price is around this area here, I want price to do what? Clear these liquidities which are around this area here and get back to the daily EQ. Okay. I don't sell below the daily EQ, and I do not what buy in above the daily EQ, because this area here we call here what premium. Okay. We call here premium, and we call here what discount. Okay, so what do we do in discount? We buy in discount and we sell in premium. I'm saying it again. We buy in discount and we sell in premium. This daily EQ line is a cheat code that I've given to you. Okay. Always look at how price reacts to the daily EQ. Sometimes price will come, okay, comes all the way down to the daily EQ, breaks the daily EQ. And anytime price breaks the daily EQ, I'm looking for longs. Okay, because the moment it breaks the daily EQ, it has gone below the daily EQ. And what do I do in the daily EQ? I buy there. So I'm going to buy around what the daily EQ. I'm going to use the daily EQ as a what? As a support area. Look for some what inversion fair value gaps in this leg here. Okay, then what aim for what higher liquidities up there. Okay, I'll look for some type of what inversion fair value gap here, and I'll look for what price to close above it. Then I'll do what I'll buy. But aim for higher prices up there. Okay, that's so this model is so simple. Okay, and I'm going to be posting this most of the time in my Discord, and so that those that join my Discord can have a fun time learning. Okay, thanks for listening to me.